Hey everyone, welcome back to Corporate Decoder, the place where we unwrap the secrets of the business world faster than a CEO rips through expense reports. Today we're diving into Hyperscale Data Inc.'s latest filing, and let's just say they're looking to raise some serious cash. Stick around to see how they plan to do it and what it all means for you. Don't forget to smash that subscribe button if you love getting your financial news straight up, and join our Discord community for even more insider discussions. So what we have here is a company letting the world know about a big deal they just inked. Hyperscale Data Inc. is getting ready to sell a bunch of its stock, and they're using what's called an at-the-market offering. Think of it like having a standing order to sell shares whenever the price feels right, up to a whopping $125 million. This isn't a one-time big sale, but rather a way to gradually sell shares over time whenever the market conditions are favorable. The company making these moves is Hyperscale Data Inc., and they're incorporated in Delaware, which is a common place for companies to set up shop. Now, what exactly are they selling? They're offering shares of their Class A common stock. You can think of common stock as the basic ownership slice of a company. The fact that it has a par value of $0.001 per share is just a technicality, a very small legal value assigned to each share. It doesn't really reflect the market price. The stock itself trades under the ticker symbol GPUS. You'll find it on the NYC American Exchange. They also mention a Series D cumulative redeemable preferred stock, which trades under GPUSPD. Preferred stock is a bit different. It usually pays a fixed dividend like interest before common stockholders get anything. This specific series has a 13% dividend rate, which is pretty high. It's also redeemable, meaning the company can buy it back later. This whole maneuver was put into motion on August 29th of 2025. That's the date they officially entered into the agreement. The actual deal they signed is called an at-the-market issuance sales agreement. This agreement is with Wilson Davis & Co. Inc., who will be acting as the sales agent. Their job is to help Hyperscale sell these shares on the stock market. As we mentioned, they're aiming to raise up to $125 million. This is a significant amount of money and tells us they likely have plans for this capital, maybe for expansion, new projects, or to bolster their financial position. To be able to sell these shares, they needed approval from the Securities and Exchange Commission, or SEC. They had already filed a shelf registration statement. A shelf registration is like getting pre-approval to sell securities over a period of time without having to file a new registration for each small sale. This makes the process much quicker and more efficient. It was filed in July and declared effective in August. Just before this agreement was signed, Wilson Davis & Co. Inc., the sales agent, isn't guaranteeing they'll sell all the shares. They've agreed to use their commercially reasonable efforts. This means they'll try their best, following normal market practices and legal rules, to sell the shares at the best possible prices. Hyperscale Data itself will control the specifics of these sales. They'll decide how many shares to sell, over what time period, any limits on daily sales, and the minimum price they're willing to accept for each share. This gives them a lot of flexibility to manage the impact on their stock price. The filing details the agreement, but it also points out that this description isn't the whole story. For all the nitty-gritty details, you'd need to read the actual sales agreement itself, which is provided as an exhibit in the filing. They also included a legal opinion from a law firm called Olshon Wolosky LLP. This opinion confirms that the shares being offered are legally sound and can be issued and sold. It's a standard part of these filings to ensure everything is above board legally. Moving on, we have a section about regulation FD disclosure. This is basically a heads up that the company also released a press release about this ATM offering. This press release, which is attached as Exhibit 99.1, provides the public announcement of their plan to sell stock. Companies use these press releases to make sure information is available to everyone at the same time, preventing unfair advantages for some investors over others. There's a standard note here that the information in this section of the report, like the press release details, shouldn't be seen as officially filed with the SEC for the purpose of certain legal liabilities. It's more for informational purposes and to comply with fair disclosure rules. Finally, this part of the filing lists all the supporting documents included with the report. This lists the legal opinion we talked about earlier. This refers to the actual at-the-market issuance sales agreement itself. This is the consent from that law firm Olshon Wolosky LL to have their legal opinion included in the filing. And here's that press release we mentioned providing the public announcement. This indicates that some of the filing is formatted using inline XBRL, a technology that makes financial data more accessible and machine readable for things like analytics. This specifically points to the cover page data being in that inline XBRL format. And the report is signed off by Henry Nisser, who is the President and General Counsel for Hyperscale Data Inc. This shows the company is officially acknowledging the contents of the report. Now, looking at the bigger picture here, Hyperscale Data Inc. is essentially signaling that they need or want more capital, and they're choosing a flexible way to get it through the stock market. This at-the-market strategy is popular because it avoids the direct impact of a single large stock offering. It allows them to tap into investor demand as it arises, potentially getting better prices for their shares over time rather than all at once in a lump sum. The fact that they're raising up to $25 million suggests they have ambitious plans or significant financial needs, or even fending off competitors. Better market strategy is popular because it avoids the direct impact of a single large stock offering. It allows them to tap into investor demand as it arises, potentially getting better prices for their shares over time rather than all at once in a lump sum. The fact that they're raising up to $25 million suggests they have ambitious plans or significant financial needs. Without seeing their detailed financial statements in this particular filing, it's hard to judge precisely why they need this money. However, firms in the data infrastructure space often require substantial investment for building and expanding data centers, acquiring new. The key risk for investors here is dilution. When a company issues more shares, the ownership percentage of existing shareholders decreases. If Hyperscale doesn't use this new capital effectively to grow its business and increase profits, the value per share could go down, diminishing the returns for everyone. On the other hand, if this money is invested wisely into growth opportunities, it could lead to significant value creation. It really depends on the execution, the company's ability to manage the sales strategically. Avoiding significant price dips will be crucial. They've set up a system where they can pause or stop sales, which is a good control mechanism. In conclusion, Hyperscale Data Inc. is preparing to tap the equity markets for substantial funding. The strategy is sound for managing the process, but as always, investors should look closely at how the company intends to deploy this capital to understand the potential for future growth and profitability. Alright, what's your take on Hyperscale Data's cash raising plans? Do you think this is a smart move or a sign of trouble? Let us know in the comments below. If you found this breakdown helpful, give us a thumbs up and remember to subscribe for more corporate deep dives, and definitely check out our Discord. The link is in the description. Thanks for watching, and we'll see you in the next one.